Well, folks, we come in on some Monday mornings and do our pre-market show, discuss what's going on, and sometimes we have so much we know we're not going to get through it. Today's not one of those days. It's quiet out there. Thursday, Friday rally, dealing with the 4K level. We'll talk some earnings, some chicken earnings, one interesting analyst rating. We'll talk about the continued rotation, healthcare coming back a little bit today. Good thing we have the Quastinator on at 8:35 to set us up for this week's options expiration. Mitch, bring the people what they want.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, investing world. S&P's less than a 20-point range. We're down 12 and a half handles at 39.8775. I think we got a battle for 4,000 going here. I really think that that's going to be for the next couple days. Can we get over 4K, build a little base over 4K, and then work our way up? 4,100, maybe 4,175 was that high on that CPI day back in September. The buck is roaring back after a couple bad days, up 88 cents at 107.04. Not much considering how much it came down. TLT down 53 cents, 97.36. Gold backing off down a $1.03, 87.95. Gold down 7.20, but not much compared to what it did last week. That's at 17.62.40. Silver was weak on Friday too. Weak again today, down almost 8 cents at 21.59. Bitcoin, after getting down to that critical level, down to 15.2, we got our new line in the sand. Back up $270 to 16,320. Ethereum futures, they're up $19.50 at 12.29. So let's bring in our Triple D, and he could tell us about. Well, there probably wasn't much after hours on Friday, huh? Was there any fireworks after hours on Friday, or is that too far to remember?
Hard to remember. I mean, long weekend, lots going on, trying to figure it out. I'm still stuffy from COVID from 2 months ago.
Tell us about the snow.
I don't know.
Tell us about the snow at your house.
Well, you can show the picture. I did a little picture, Mitch, if you want to show from my Twitter feed. I could turn my camera, but then you'd probably see my pajama pants and everything, so I'm not going to do that. But we got about 3 inches last night. Lots of fun. November 14th. Let's get smoked, So there's some snow out there. I'll take another picture. I'll tweet it out there today. But Mitch wants to show. I did tweet a little picture when the festivities were starting last night. So it started coming down around maybe 8 o'clock last night. So 3 inches, supposed to snow. You can show my 10-day forecast if you want to, Mitch. I tweet out 2 pictures. The 10-day forecast, too, in the area is pretty interesting because it calls for snow for every day except one. I'm like, what the hell? Are we in January?
Is it this picture?
I'm in the North Pole.
Is it this one?
Let's see it. Which one?
Oh, yeah. No, this is just the market. This is just the market. Don't worry about that picture,
I know that's what we just did. Like, we just bobbed up. It's so right.
Don't worry about that one. We're talking
there you go.
There's
picture. The snow. That's the snow.
Yeah,
there's my front porch.
Hey,
front porch finally done. We just finished up the front porch, so the house is pretty much done now. But yeah,
looks
you
good,
can see
man.
the snowflakes falling. That's what's happening here. And then go to the 10-day forecast.
Oh, the 10 days.
This is what I'm in store for. Here you are in Georgian Bay. Welcome to Georgian Bay.
That doesn't seem too bad. That doesn't seem
Joel
too bad.
shakes his head. He's like, why in the hell would you build your house up here?
The only thing is, do your kids take snowmobiles to school? That's what I have to ask.
They will one day. They're a little bit
just
young.
Snowmobiles to
They're
school.
A little bit young for that, but they will. That's coming.
Yeah, because I don't know.
Everybody's got sleds up here. Everybody's got sleds up here.
Yeah, the school bus ain't getting there.
One
No,
thing I
well,
miss about
actually, no. Believe it or not, in my town, you don't have a lot of snow days. The school bus drivers are just better drivers. They drive. Like there's 3 inches of snow on the road today. The buses are driving. So there's no up here. They're used to winter. Like I mean, I remember like when you're in Windsor, Detroit, you get 6 inches of snow and everybody's like, oh, it's a blizzard. And up here they call it Monday. So if you had a snow day every time we got 6 inches of snow, nobody'd ever do anything. So different world up here, man. You gotta like the snow.
One thing I
Anyways,
missed
no
from the
more
floor
snow
was
talk.
the snow futures. They used to make a market in snow and how much snow you would have in Chicago in a year. I don't know how this guy Eddie kept track of it, but there was a two-sided market, and
Snow
you had to
futures.
put money in. 1 inches, 2 inches, whatever the market was. Bids and offers. But that also that in the 13 run pool. Have you ever been in a 13 run pool?
No, I don't even know what that is.
It's during the baseball season. You get whatever. There's 26 teams, probably more
Our
now.
degenerate gambler, Joel.
You put in like
Joel's the degenerate
$10.
gambler. Yes, he really is.
Yeah,
Joel
degenerate
gambles
gambler.
on everything. Like
He likes
every
to
single thing
that's right.
he
gamble.
Yeah,
gambles on.
He likes
Gamble.
it. He enjoys it. It gets him going. Gets the juices
Everything.
flowing.
Everything is a bet.
That's when you're
Everything
one
is a
of the
bet with
best
Mr. Elconin.
handicappers of horses in the nation at the age 7. It tends to happen, but it tends to get boring.
Yeah,
But I could tell you, I don't have one DraftKings account. I don't have one Penn
Not
Gaming
yet.
account.
Wait till I get up there. I'm gonna get Joel on it.
I don't bet on
like to
sports
do
either.
elimination
I
pools.
don't either.
Elimination.
You guys are
pools.
missing out,
right.
but all right. Let's get into
Okay,
it.
we really digress here. 7 minutes in, we haven't even talked the stock yet.
Let's do AMD. Let's do AMD because I want AMD to come out with a robotic snow shoveler. That's because that's what Dennis needs. Definitely
chips and everything. Chips for everyone. This is
the chips got bought up, and that definitely happened on Friday last week. And I had a question on Friday. Was it going to be growth? Was it going to be value moving higher? Well, it seems like we got our answer, at least in some areas. You definitely saw some growth stocks come alive. Definitely saw healthcare take a little bit of a back seat. And now we need to keep watch. Will this rotation kind of continue to the growth names, or will it be some value still in the lead? That's what we're going to have to be paying attention to.
This is a real tough call on all these stocks, but the rallies are nothing short of incredible. I mean, take it to Unity for a second. Back to Unity. I sold it on Thursday, a day early, because it goes up 20%. 28%, and then tax on another 20% the next day, Joel. I mean, these things were way oversold, so they're getting wicked rallies. But that thing kissed 18 in the after hours, I believe, on Wednesday when the earnings were disappointing. Or was it? Yeah, because then Wednesday morning. No, and the after hours Tuesday would be. When do we get CPI? Wednesday, right? Wednesday, Thursday, Friday. Was CPI Wednesday or Thursday? I'm losing track of days.
Thursday.
So Wednesday night. Unity was down on its earnings. They didn't like the report. It kissed $18 in the after hours. I won't see that on the chart. You'd be like, Dennis, what are you talking about? Tanya, $18. Joel might be able to go back far enough back on his after hours charts to see it. Can you do that?
See it.
See that
go
dip
back.
right there.
Let's just look. Yeah, let's go look. Look at that. In the 18 handle. In the 18 handle. It was down the entire session. It was the next morning with the CPI they just decided to start buying everything. So I guess obviously that was your capitulation low right there. But holy cow. We went from 18 and change to 32 in 2 trading days. The stock has doubled in 2 trading days. You're going to come buy it now? I mean, holy mackerel, backwards, Batman. I mean, I don't know. This is the momentum traders. Maybe this thing is going to go 40, 50, 100, and it's just going to go crazy. I don't think we're in that market. I don't think we're in a V bottom. So I'm still selling reps, and I've been lightening up in the portfolio. I was at 32% cash. I think I'm back up to like 41 or something. I sold my Unity. I sold about 4 or 5 stocks out of the long-term portfolio. I probably got 30 in there. But stocks that, a Unity was one that I was dead wrong on. I bought at $28 on the way down. And I lightened up a little bit before the report, which obviously I shouldn't have. I sold part of it, I think, at like 24. I didn't want to go through the report. There was a couple days before it. And then, it ripped, roared, rallied, and gave me my money back on the last piece. And like, I don't want to be in this. And, obviously it's one of those stocks not making money. Mistake, obviously, day early. $32 here now. So, but I don't know.
Was that in your swing or your long term?
So much.
Was that your swing or long term? Swing
I put it in the
portfolio or
long term. It was kind of swingy though too, Joel, because I was like, I wanted to hold that low. And then I got stuck with it.
It was
So
in
then
between. It was in between the swing to long term.
Okay.
Everything you say you're not supposed to do, but you break the rules for yourself. But
I know,
no, it was
because
the only thing.
Yeah. The only thing I would have said, if this like somehow like you like wouldn't have looked at that 18 print, like if you would have been doing something else,
I may have been more comfortable.
And then it was back up at like 22 or 24. Like when you looked at it, I know you look at everything all the time, but like you're like 18. So you saw 18. So you're thinking 27, 28. That's
18.
Yeah, it's exactly. So it's $10 higher. You're like, huh? I just made 10 points.
I'm like, this thing was 18 last night. It's 27. How do I not sell it? I'm like, it just came back 50%, and we haven't even opened. I'm like, how do I not sell this?
Well, why did you get
all these stocks that have just rallied so much?
Why did you get in this stock?
Which brings you to my AMD. Which brings you to the AMD. I know, I bought some at 56. I tripled down at 56. I tripled down.
Why have you been taking some kind of exposure into these stocks at this time? Why
was I coming into some of these stocks?
Yeah, why was the plan there?
I just thought they were oversold. So, and I wanted a little bit of exposure to growth. So I'm like looking at my portfolio. I'm like, was sitting at one point in time, 51% cash in the long term retirement RSP. It's called, like your IRA. It's only job. I can't like take that money out and go, because if I take it out, it's taxable right away. That money, all that is to invest. I can't go out for fancy dinner with that restaurant. I can't go buy a house with that restaurant. I can't do anything with it. All I can do is invest with it. So when you're 51% cash, you're like, I don't want to miss the boat. So I had, over the course of the last few weeks, you guys know that I was buying Marvell. I bought AMD. I bought like 7 or 8 stocks. Unity was one of them too. Unity was the bag of them all for sure. But there was a few other ones too. And I bought some, some cyclical names like, I'd have to go look, but I bought like 7 or 8 stocks over the course of the last few weeks. I just thought it was sold. And I also thought with the chips, I was like, I like the bottoming pattern. Joel, that's what I was looking at with AMD. I'm like, well, we're not making new lows.
Oh, that was
like the market wants to make new lows. Like the Qs were trying to make new lows. You had mega cap tech getting killed, but yet AMD was holding up. Micron, which I still own, was holding up well. A number of these chip names were actually holding up. So you could tell, even NVIDIA, you could kind of tell that, they were selling certain stocks like the mega cap tech, but they weren't selling the chips the last few weeks in the downturns. They weren't selling them. So it felt like it was like a bottom had been put in some of these names. So I felt a little safer to buy some of those names, Mitch, to answer your question. But now it's like, I feel like it's a time to ring the register. I mean, you get the double upgrade today on AMD. The thing was $57 3 days ago. It's 75, and now you're upgrading it? I'm like, backwards, Batman. So I've sold my AMD. It's just too much too fast. I feel like I'm going to get it back. And I might be wrong. You sold it?
All of it?
Yeah, I might be wrong. Joel, I might be wrong here, but look at the move here. From 56
I know.
to 75.
You sold a piece of it, or you sold?
I sold it all this time. I sold it all. I tripled down. I sold it all. I might be wrong, but I'm just lightening up. No, I sold it Friday, right into it. 70. I sold it on Friday, so I'm early on that too.
Okay.
I've been terrible on the sales. I'm early. I'm always early. I'm always early on the swings. I'm always early.
I mean,
I'm too excited, and I'm like, holy. I think like a 30% move in a day is a lot, and then it goes another 20%. I'm like, well, why did I sell it? But yeah, it was probably a mistake. Definitely a mistake. It wasn't probably a mistake. It is a mistake. The thing's up another $3. But
do you ever look before you do that? Do you ever look at the monthlies? Do you ever look at like I know you look at the percentage and where you bought it and what a big move. But do you ever before you do it, take a look at the monthlies? Or not?
Yeah, well, I'm always looking the 90-day. That's what I'm looking at. I'm kind of in the 90-day. When I'm swing trading, I'm always 90-day. I never look at a tick chart. I never look at like intraday charts for day trading. For my swing trading or long-term investing, I'm the 90-day. But look at the monthlies. Go ahead, do the monthlies. Show me what you're saying on AMD. I mean, it's bottomed. I just think it went too much too fast.
Yeah. Well, I sell the people that owned it at once. see to go to 120, think it went down too fast. I mean, I'm just saying, when you catch these things good, right?
I
And
usually do enter well.
the market, yeah, you enter it well. And I think you see things from your trade, from your day trading perspective that like kind of make moves bigger than they are. Because you're seeing this interest. Well, yeah, this can't go any higher. Would you? You sold AMD. Would you have shorted AMD on Friday in an overnight trade?
No.
I mean,
No,
I don't think so. It's hard.
But I
I'll
was
just
looking.
go back to the
Hindsight
dailies on
capital,
this.
Joel, is 2022 though. Like, I mean, we can look
I
at this and say,
know.
why'd you sell it when it's 75? You know what I was looking at? I was looking at that 70. I was looking at that 70, and look at that. The high back on the 90-day or on the 90-day chart, the 70.29, October 6th. I'm like looking at stock go from 60 to 70 in a day, basically in a day. So a 20% move, basically in a day. It's a 20% move in a day. Basically was, from 60. We know it was up like 16% the one day, and then it tacked on another 3 or 4 at the open. And I'm like, this is just too much too fast. Now I'm wrong. I'm obviously wrong. So I'm too early on it, but I'd rather be too early than too late, because when you're too late, then you miss it and then you get stuck. So I just think we've rallied so much so fast in this market on a CPI data point that, to be dead honest, wasn't like, wow, we're at 6% inflation. I mean, we ticked down a point. I don't think the Fed's going to lay off the gas. So I'm lightening up into it. I'm not fully bearish into this, but I'm like lightening up my portfolio. Like, I've got the certain portion, the ETFs I don't touch, the S&P, the SPY, the Qs, I've got all that stuff in there. But there's certain stuff in that long-term portfolio that I am swing trading and trading to a certain extent. So but I'm early. I've always been very good on the entries, and on my swing trades, very poor on the exits. I'll say it. I get out too early.
Yeah,
I leave a lot of money on the table.
Yeah. All right. Well, I'm just when I look at these, and I kind of like say, oh, that stock's never going back to the all-time high, and you say, well, never say never. But I look at something like AMD that had an all-time high of 164.46, got into the 50 handle, 58.03. Who knows if this is like a major turning point, but if you have a kind market for the remainder of the year, no tape bombs, nothing coming out of the Fed, and the market continues higher, AMD is going to chug higher too, and that's that's the way that I would try.
But what if you don't? What if you do have more tape bombs? What if you do come and all of a sudden the Fed officials come out and and they did say over the weekend, there was one Fed official, this was one data point. He says, I think about, a turn, is a little bit premature. Market ignores it. Maybe the market starts ignoring everything, but I don't think tape bomb season's over.
I don't think it's over.
Yeah.
Are you full on bullish here now, Mitch? You're like, we're all rah bullish. Like, let's just upgrade everything. We're safe. We're going back to all-time highs. Is that where you guys are at? Because I'm not there.
I'll bring you a comment that supports your thesis here, that this could just be one data point. Federal Governor Christopher Waller saying that quit paying attention to the pace and start paying attention to where the end point is going to be. Until we get inflation down, that end point is still ways out there. That was said by Waller on Sunday. Now, I think really now what you're getting into a mixed battle here is, do you feel that this run is going to last? I don't think this run is just a complete reopening of a new bull market, but does this have some legs? Can it continue to run? Yes, I do feel it continues to run, because now I'm starting to see from even bullish investors that a lot of investors that I was following on Twitter and things like that, that were really raw bullish, got to the point where they were hesitant about the rally. That told me something. That told me that they are worried about getting long on stocks and getting caught in bear market rallies. The bulls are worried about this.
So you know what that means? You know what that means? We're going a lot higher.
Yes, and I feel that way,
If the
Joel.
bulls are worried about,
I feel that way.
Yeah,
I feel that way because they're hesitant now to put money into play. The money managers are not going to be hesitant in putting money to play. I think that money managers right now, they're like prime time to make some money before the end of the year and try to hit our numbers that we've been trying to meet for the year.
One thing that maybe, and this is so it's so fundamental. It's so off the what you're doing and what you're talking about. But like Biden going and meeting Xi, today. I mean, as
That was
opposed to,
important.
yeah, I think, like everyone's looking for tape bombs. Maybe what would be the opposite of a tape bomb? Like,
we're going to work together.
yeah, but we got to think of a term.
Cooperations.
Tape.
What are we going to get? Life support. Life support.
How about tape teasers or something like that? Like, good relations with China.
Good news coming onto the tape to profit.
Russia, withdrawal, under siege, boom. Things like that. PPI comes out.
I think
better
at
than
this
expected
point,
this
I think
week.
at this point, you're thinking of what negatives can come into the market. The negatives are inflation getting higher. The negatives are maybe energy scares in Europe, bringing inflation higher. That's why I'm not full on long-term bullish. If I saw the situations with energy turning around completely in Europe, well, I'd kick this out the water and I'd be full on for the bull market of, let's say, 2023. But in my eyes here, there's still energy concerns. There's still inflation concerns. So there's headwinds still there. But the big thing is they're above. And I feel like we have some room there to really push towards those headwinds. And then those headwinds can come back in. That could be earnings revisions. That could be, of course, inflation getting higher, oil prices going higher, natural gas finally spiking after the reserves come down. And I think that those are things that you can look for signs of concern. But right now, I still think we're climbing the wall of worry and we got momentum.
We do. There's no doubt we have that. Nobody knows. Like, we'll go back to it. I don't know. If I knew, I'd have all the money in the world. Nobody knows anything. You're making logical guess. My stock goes up 30% in a day. I sell it.
There's nothing wrong with that.
What's the Kramer
There's
saying?
nothing wrong with that.
The pigs get slaughtered.
Yeah. I mean,
30% in a day is incredible. My stock goes up 30% in a day. I sell it. I've not made a lot of money buying stocks up 30% in 2022. But you know what? Every time they've went up 30% in 2022, when I look back a month later, they've usually been pretty good sales. So
and I think that's a great approach, Dennis, because like I've been doing the same. I've been trying to more rent these stocks up and sell the profits, not trying to keep it, because I don't think that this is the complete bottom, but I am going to be trying to make the money on the upside moves like Amazon on Friday, Microsoft on Friday. I felt those were really nice moves to play towards the upside. Was able to play Amazon into the 100 handle, and that wasn't a bad move at all. I felt that 100 would act as a little bit of resistance. We got through it, and I sold out of the trade. And my idea here is to continue playing the momentum until it turns.
$110 is where, I think Amazon has room to. I'm telling you, if it goes to $110 in the next 2 days and it was $85, goes to $110, I will sell Amazon too.
Me too.
So,
but I think at that point, you ride it up,
sell
right?
rips. I sell rips and I buy dips. Hey, so if we get a huge dip, if AMD pulls back like $62, I'll probably reload it. But I'm not chasing here. I don't think, it would have been the play to chase on Friday. We were even questioning. I never chased, but I was like, to chase or not to chase. That was the question we posed on Friday, taking it from Shakespeare. And it was, and that was the total thing, is you had to buy that early morning dip on Friday. It gave it to you for like literally 10 seconds.
Minutes.
It felt like
10 minutes.
10 minutes. And then they just ripped them higher again because all the money managers that are caught. They're still caught. There's still money that wants in there. The short-term momentum is still higher. There's no doubt about it. But it turns so quickly, on one headline from something that I don't want to get caught in that. And the reason, too, is NVIDIA reports on Wednesday. I don't want to take AMD through NVIDIA because what if NVIDIA drops a bomb again? I don't know if they're going to, but what if they did? So that's why I'm nervous about that. And I see a move. It was a big move. It's a bigger move here today. But I'm not coming in and buying AMD today at 75 with these two analysts that couldn't make a call 3 weeks ago when the stock was clearly bottoming. They're late to the party. I'll fade them.
So right. Real quickly, just to put everything in perspective here, because you can always look left. and I'm, whether it's AMD or whatever, I'm going to look right on this S&P chart here, the upper right chart. It got the area that I thought was really a major resistance, and this is called S&P Futures 3930, right?
Okay.
It got through there. It's closed above there 2 days in a row. On Friday, I was hoping for it to come back down to this area, right? Old resistance, new support. It didn't. I think as long as you hold this area, and now we're 60 handles away from it, so it's even farther away. I just think we got to decide what the significance of this bar here. The significance of that bar was the September CPI that actually was the August reading, right? They took us down. We paused for 2 days, and then they took us down more. So here they took us up. Let's see if they take us up again, and then the continuation move. I'm not saying we're going to 41.72, but I'm just saying we hope we're in a holding
room
pattern.
To there.
Yeah.
Yeah, there's room to there.
Yeah.
And maybe we do. And maybe we should hold for the next 200 S&P handles. It's probably a good idea to hold some stocks. I'm not short the market. I'm still 60% long the market. That's one thing, like we can look, and you got to analyze your own situation, right? I always fluctuate my long-term portfolio. I feel like between certain cases with COVID, I was actually almost 100% cash before the COVID because you could kind of see that coming from a mile away 2 years ago. It's the only time I put basically all of my money in cash and bought puts. But, most of the time I'm somewhere between 20% cash. I'm never 100% all in on the long-term portfolio. I'm working the cash, and the cash isn't a bad asset right now. I have 5% of my cash. I tie it up in short term.
So
it's not like you're making nothing.
I'll tell you how I'm feeling here now. I think what we need to kind of understand is coming to an understanding of what you think about growth and value. In my eyes here, I think I'm going to be renting growth, but probably buying value and holding value.
There you go.
And so that's kind of my approach here. So renting the growth, momentum up. I don't mind riding that wave. But at the same time, I know that wave can turn. Now, the value wave seems to be like a more sticky type of wave that could last longer into like a new style play. So in there, maybe we're looking at like an earnings stock today. Tyson Food, get your chicken, right? Well, let's take a look there at Tyson Foods earnings here. EPS at $1.63, missing the $1.73 estimate. Sales at $13.74 billion, beating the $13.49 billion estimate. Tyson sees full year 23 sales at $55 billion to $57 billion on the high end versus their $53.61 billion estimate. So lowering their full year 23 sales.
And it's up. So, I mean, we are in this market where bad news is now being rewarded too. More to Joel's thesis that the path of least resistance is probably higher in the short term. I liked what Money Mitch just said, just taking it back there to renting growth in the short term, but buying value in the long term. I'm the same page here right now. I'm not coming in here and telling you to short AMD at $75. What I'm telling you is I'm bringing the register on some of my longs. And I'll play the momentum. I'll continue to play the momentum, I had a pretty good day on Friday. I mean, and what I was doing wasn't the day trading account, the short-term account. I was playing some of those growth names and I was, making some money off of that stuff. So, I mean, that's all trading is identifying the momentum. So short-term, the dip probably gets bought today, just like it did on Friday. I mean, there's money managers that are in trouble. There's no tape bomb happening today, at least not in the morning.
Not yet.
So I'm at a point where I got to think, tape bombs can happen anytime. But, it's, and with Biden going to meet Xi, that sounds pretty good too. So I think short term, renting growth to upside isn't a bad idea. Is AMD my stock today? Probably not. But just got to be careful with the rug pull too, because these stocks are not all of a sudden on bases anymore, Joel. It's not like so let's just say, hypothetically, you go along with these two analysts. We'll take it back to AMD because Tyson's boring. Take it back to AMD.
I just want to say 69 is huge.
Yeah, watch for 69.
Keep an eye on 69.
Go ahead, Tyson. But take it back to AMD. You guys are rah bullish. I buy AMD at 74.90, thinking it's going to 80. Where's my out? Where do I say the trade's not working here? Where do I say, okay, I'm out because this trade's not working? Where is my defined risk on this AMD chase?
72.37 or below the close.
You're getting stopped out all day.
Okay.
72.37. You get stopped out on everything when you're that close in this market. There'll be some rug pull. Oh my goodness, they're fading the downgrades. It'll come to 72.35 and then it's at 78 and you're like, what happened? So I think you need to have better setups than just coming and chasing something here. If you're long AMD, congratulations. My target would be 80 at this point in time. But if you're looking to buy it now, I don't know how you control the risk. I don't know. It's just all air below it. Sure. So, the S&Ps as well. I mean, same thing. It's tough to control the risk 100%. From a swing trading perspective here.
Definitely, because you don't have a true support to go on. You would have to go like Joel said, and you'd used to use the low to go off of the move, the recent low. What I see here on the daily chart is a 3 white shoulder candlestick pattern. So what does that mean? That's usually a turnaround of reversal style action and then seeing 3 green candles close. Usually these green candles go into each other's body and then close higher. So you still get, of course, the higher lows, but also the candles breaking into each other's price action on the prior day. So I would be looking for this similar pattern to continue and closing the pattern here of the 3 white soldiers. You guys can look about that pattern. Of course, it's up to you if you guys like technicals, but that's the way that I see the AMD chart. All right, let's keep going. We can go to.
I was just texting with my wife on the snow day.
What about a growth stock here like Monday reporting news here? They got their earnings to report here. EPS at 5 cents, not comparable to their 54-cent loss estimate. Sales at 136.9 million, beating the 130.4 million estimate.
They're buying all this stuff right now, to your point, Mitch, renting the growth. I mean, right now, it doesn't matter. If you're going to report bad earnings, report it this morning. I don't know if Monday was bad or not, but they're just buying stuff growthy. They're right there. Mitch, you've clearly identified and very perfectly that the momentum to the upside, and you too, Joel, is that its growth has got the momentum right now. I mean, as much as it was hated 3 trading days ago and everybody was selling growth hand over fist, it's those stocks that everybody's like, oh my gosh, I've sold the low and now I've got to come back in and get in. So, I mean, Monday's up 17 points here right now. I know if you look at your ticker, you're like, what are you talking about, Dennis? It's only up 5. No, it's a bad tick. It's at 112.25 bid right now, trading up 17 points right now. I don't make any money buying stocks up 17 points, so I would ring the register on it, but that's where the stocks are right now. Growth is hot. If you're not making money, you're hot right now.
All right, this one's setting up very, very easy for resistance. And as far as where to buy it, you have to tune into your shorter term charts. But you got a surge to 121.27, right? And then you got your dailies. You got a pair of highs, 21.31 and 21.68. Now you've backed off $8. So that's a 5-star, 6-star, 7-star. If it better get back up that area. You could probably find some other intermediate levels, but I think that's going to be a tough level going forward. Buying in a pullback, I have no idea. The top of yesterday's range is 98.98, and unless the market completely falls apart today, I don't think you'll be seeing that. But keep an eye. Pre-market high coincide with 2 other daily highs.
All right, let's go ahead. Let's go. I said it last week. I was somewhere. I could hear her in the far distance. Deflation. Well, she came out this weekend and gave a big thread. Words from Kathy Woods. Let's get into that.
She's going to be right eventually. We're going to have prices
She's
come
smart.
in.
She's smart. She stays on it. She stays on it.
Yeah.
She's consistent.
She was deflation when her ETF was 170. So she's going to stick with that. She's never going to change her tune. So
let's give
that's obvious.
Her comments here. If inflation is unwinding as we believe, then we could be heading back to the future, the roaring 20s, the last time several general purpose technologies evolved at the same time. We had the telephone, electricity, and the internal combustion energy. The setup is remarkably similar. Speaking to this time, she also said that if the Fed does not pivot, the setup will be more like 1929. The Fed raises rates in 1929 to financial speculation. Then in 1930, the Congress passed Smoot-Hawley putting 50% tariffs on more than 20,000 goods and pushing the global economy into Great Depression. So she sees us either going into the Great Depression or the Roaring 20s. What side are you guys on, chat?
Anyways, everything she says, I just ignore for the most part, but I didn't ignore this on the weekend. I actually tweeted at her on there. I was like, well, what if it's a different scenario? But whatever. I'll tell you, ERC has the momentum. I see room to 45. So, Kathy, if you're listening, hey, look, we're renting you for a little bit here. I think on pullbacks, ARKK is full of these growthy names that are hot right now. I don't know when the rug pull comes as a problem, but you did have, the Gil Morales undercut and rally right here. Boom. From 32 to 40, it's a big move. Your stock's up 8. You're talking about 20% move or ETF in 2 days. So huge move too. I think there's room to 45. But I think I don't think it's as clear a sled and we're just going to continue to buy these growth names. They're all going to have V bottom. The Kathy's going to be $170 next year. I think all those people are burned. The illogical investors are out of the market or they've been hammered out of the market and a lot of them aren't coming back. I don't think we're going to get just silly town here for a long time again. It took 20 years for us to go silly town from 2002 to 2021, really 18 years. So I think that generation of investors that tried to come into this market will be laying off for a while. Crypto is still not, recovered at all. So I think you could rent Kathy, but I wouldn't go long term in her.
I keep a close eye on 41, 41.10, 41.20. I know, Dennis, you see room up to 45 on this. The reason I say that is because the high last week was 40.93. You got another high here at 40.97. A high just under that. And a lot of things, just like a good general tip. Like, let's say you're playing the, ARG from the long side. You have a strong day on Friday. And this applies to the market, the overall market too. If you get foul through, you have a strong week and then you get through that high from that week, you're off to the races. That's the same thing that I'm looking for in the S&Ps if we can clear that 0975. But we've won a couple minutes late here. And Mitch, you want to roll the intro for Tim Quast from Market Structure?
Let's go ahead. Let's find
roll
out
that intro.
If this market has some legs. Tim Quast joining us from, you still in Charleston?
I am. Happy Monday to you, Money Mitch. Yes, we're in Charleston.
A little bit of that rain. Can we kick that out already? Come on.
There isn't a cloud in the sky here in Charleston.
That's what I love to hear.
Beautiful, blue, crisp. And you're in North Carolina, isn't that right, Mitch?
Yes.
Is that where you are?
Yes.
So we were in North Carolina over the weekend. And on Friday we were in Raleigh, Durham.
I like that.
And it was 80 degrees, right? It was probably the same for you.
Can't go wrong.
No, the weather in the South has been okay. Now that's why we're here.
The market last week, crazy week, starting from the crypto to the CPI report. It seems like we have ourselves a rally. Talk some sense into us, or maybe talk some data to us. Let us know, Tim. What do we see out there?
Well, so there's a bunch in that statement you made, Mitch. So first, let's take just the big rally for equities, and why would NASDAQ stocks go up 7% on really, a lot of that rally occurred before the market opened. Almost all of it. Call it 80% of the rally occurred before the market opened.
It did.
Futures. Yeah. So hard for all of us to capture that. There were some great opportunities, and I think we all took advantage of those. I certainly did. But to me, Mitch, when the market rallies because the rate of the increase in prices declines a little bit, from 8.3% to 7.7%, I realized the implication, and clearly people were betting on, well, now maybe the Fed will do things differently. It's unfortunate that we have a market that is so dependent on what central banks do. But that, this is something for traders to keep in mind, that when markets move irrationally, particularly in periods where we can look at the economic data and the jobs data and see that there's general deterioration. As I mentioned a couple of weeks ago, earnings if earnings year over year are down 5%, they're not up, they're down. And you can look at the scroll on CNBC and see all the layoffs. We know that economic conditions haven't even manifested in the markets yet, nor have they manifested really in the data that we measure. So when you see a big rally in the markets, traders, be very careful about that. Rallies during periods of contraction in money flows and contractions in economic signals are driven by arbitrage. And arbitrage is a jargon term, but all you have to know is it means that people are trading the same things at different prices. That's all arbitrage means. And unless and until economic conditions change, one should be very aware that that is what's occurring. And it happens in any market where trading things at different prices, like cryptocurrencies, and we could talk about that a little bit.
Let's go there, Tim. Let's go there.
The fundamentals don't support the activity. So I'm not I'm not purporting to be any expert in cryptocurrencies. That's not my area of expertise. I am very familiar with economics, monetary policy, and market structure. And so here's how I think about this. The prices of commodities are driven by the consumption of the commodities. The prices of real estate are driven by the consumption of real estate, supply and demand, right? Supply and demand. There are other factors, yes. The consumption of equities are driven by the output of the underlying businesses. So what drives cryptocurrencies? What drives currencies? It isn't the consumption of the product. It is its capacity to serve as a medium of exchange. And so when cryptocurrencies soar in value, but there is no consumption of an associated product, you know that it's a supply-demand difference. And when demand increases, it will at some point peak, and then demand will fall and prices will come down. It's the very same thing we use in Edge. So I think the mistake people make with cryptocurrencies is supposing that it is an asset class that will be predicated on underlying consumption. No, it's meant to be a medium of exchange, a way to get away from the money monopoly that central banks have. And so if you treat them that way, I think that they have a place and merit. But to suppose that they're going to behave like an asset class that you invest in is misunderstanding how they function. That's my view. And so because of that, I have not traded cryptocurrencies because they're behaving like an asset class, and they're not an asset class. They're a medium of exchange. Once they behave like a medium of exchange, then I'll be comfortable. And unless and until that happens, I'm not.
Agreed.
Yeah.
Definitely. Let's get into
the overall fallout from this. Just going into that, we'll finish up on this. What about the overall fallout? Have we already seen it as far as companies that have exposure to it, or do you think it's just something that's just getting going?
I don't know, Joel.
Okay.
It's all I can say is we will find out. One good thing, I'll tell you one good thing here about cryptocurrencies, and it does prove the potential benefit that cryptocurrencies offer, is it could isolate itself from other things. The problem with the global economy and having central banks that have an effect like we saw on Thursday. Oh, they might only raise 50 basis points, so then the Dow Jones Industrials go up to 1,200 points, is that everything is interconnected. There's no place to transfer a crisis when a central bank that depends on the underlying economy is the one determining whether a crisis exists or not. The beautiful thing about cryptocurrencies is they're disconnected from everything else, and they don't have to ripple through equities and bonds and commodities and real estate and art and cars and everything else. So that's how it should work. To me, that's how economics should work. In the 19th century, a collapse in railroads didn't affect the cattle industry. Today, because of central banks, everything is affected. The failures and successes of everything are imputed to everything else. And it's a major problem, because when a problem becomes so large that it can't be transferred anyplace, what do? We all suffer. This is my concern about what yet comes. So we'll see. I'm not being dour. I'm saying I'm being clear-eyed. I try to always be clear-eyed about things. And in the midst of that, traders, there are always things to trade. You can see what is being arbitraged and what is not, and you can take advantage of it. But you should always be aware that you have to be a wise and prudent observer of what is occurring.
So jump into where you're seeing the money flow. Obviously, the money flow went into everything in the last 2 days, but where do you feel like it's safe to continue to be? Because like I was lightening up into this because I just thought it's silly town Friday where with so many moves, huge moves, and some of these beaten down names, I was like, man, it's just almost too much too fast. Do you feel follow through in certain sectors though? Like I mean, value had a rough so the drugs were down on Friday. I mean, some of the drug stocks that have had nonstop momentum were down on Friday. And I'm like, I look at that and thinking, well, maybe I want to move some money there.
I agreed. Things that didn't move weren't part of the arbitrage basket, so to speak, and they may offer opportunity. Joel, you said early on here, what's the supply demand equation look like? Here's broad, and I want to get to this, Dennis. We got a little time to look at things. Here is supply and demand. I'll look at Cardinal Health as an example of what you're talking about, Dennis. But here is the demand side of the coin. So it has been coming down, off of a peak. And then we have this extraordinary rally. So number one, when the market moves in a fashion that does not reflect overall demand, we know where it is. It is in derivatives. And it goes back to what I was saying, trading the same things at different prices. The reason that the market moves dramatically in the pre-market is because of derivatives. The futures contracts are at a right but not an obligation. And when they move at points where the rest of us really have a difficult time taking advantage of that, we know that it's derivatives and they're very fleeting. It's a very dangerous thing. But the good news is that the supply side also dropped. So if supply goes down and demand does arrive, then we could have a carry through for a bit. And I would point out we had the same thing back in July and August. I'm going to back up about 6 months and look at this. By the way, if you've never seen this, I'm looking at SPY, a proxy for the S&P 500, and then using an algorithm that meters buying and selling by investors and traders on a 10-point scale to understand demand, and then supply is short volume. Short volume is the supply chain of the stock market. It's borrowed equity. So here's what happened back here in July and August. We had a very long top. So it peaked, came down, peaked again, but it was right into options expirations. And then we collapsed. I'm not saying the same thing is going to happen here, but I expect that we will have a peak, a shallow bottom. We will peak again, and options expire this week. Now, I don't know what is going to happen. I know that if it's derivatives, that there is a risk that we could bottom and start to rise and the bottom could fall out. Again, I'm not saying that's going to happen because the supply side doesn't show it, but the supply side doesn't always show it. It shows what you look for is the reaction. If we have a down day, a meaningful down day between Wednesday, Thursday, or Friday, that's when options expire. New options will trade next Monday, a week from today. So if we have a down day and the supply side rises, I'll be concerned. But I just use the data. I don't try what we're expert at is short-term supply and demand. When I look at this, there are things I'm going to trade. But I'm also going to be very wary of November expirations because I believe that this rally was driven by derivatives and borrowed money. And that means somebody won and somebody lost. And they're going to have to square the books. And I think it's going to happen sometime between Wednesday and Monday. I don't know. I could be wrong. But this is what I expect. And so I'm going to be careful around it. Again, I'm going to trade. I was all cash by the end of the day Friday. I had a very good week again. Now I will look at things again and trade them, but I'm going to be very cautious Wednesday, Thursday, Friday. Cardinal Health. But I'll pause there while I look up Cardinal Health. What do you guys think about that?
I'm thinking this is an opportunity in some of these names, the value names that everybody wanted 3 days ago. Maybe this is the turn and we've turned, and it might be. But I think if you didn't have any of these value names in your portfolio and you were all full of growth, and I have so many people, Tim, that reach out to me like, You know, it's always the same stocks they're asking about. What do you think of the trade desk? What do you think of, you know, ARKK? What do you think of Unity? What do you think of, you know, all these beat up growth names are all in those. If you're like in a portfolio with all of these growth names, and then some of these rallied 30, 40, 50% in 2 days, what a great opportunity to take some of the chips off the table and some of these beaten down names and buy some of these value names like Bristol Myers that just fell. Full disclosure, I'm long Bristol Myers, that just fell from $80 down to 75 in a single day because of rotation. Bristol Myers didn't even say anything. You know, you've got UNH, Johnson & Johnson getting the beat up. I am long some of these stocks short term, so I am trading around these positions, but I'm just saying I think there's an opportunity here. Maybe this is the, you know, the start of a real sell-off for these names. But none of these names were really expensive to begin with. So are they going to knock Merck down to $85 again? Maybe, but maybe, you know, if you're all in on these, it's a different story. But if you're all in on growth, there's some opportunities here where some of these value names actually got hit on Friday.
Right. So I'll answer it this way. So here's Cardinal Health. I look at Cardinal Health, and it's I wouldn't call it a bellwether, but it is an exemplar of a value trade. And how do I know? Because it spends most of its time at or above 5. This is 30 straight trading days. It doesn't do what the growth names do: bounce to 10, drop to 1, bounce to 10, drop to 1. Those are you got to be very careful with those kind of trades. This tells me that the money has not moved away from these kind of stocks. So if demand is rising and price has come down for Cardinal Health and supply is falling, the trend line is down and it's below trend, there is a very high probability of producing returns in that stock. And I think the same would be true for BMY. And we can, you know, I mentioned the number. I'm the same. I was making money in things like Halliburton, Nike. You know, there were great moves. I mentioned those on Monday. They were great stocks to own, and I don't have a lot of risk in those. They don't, you know, I prefer to, as I always say, take gains, not chances. Here's Bristol Myers Squibb. Demand peaked on Thursday, but look at this enormous supply deficit. What is the probability that Bristol Myers Squibb produces additional returns? Almost a number approaching 100%. Because look at how strong demand has been. Again, it's very similar to Cardinal Health. This is a great, you know, do I buy this? Not often. I don't buy really strong demand like this, but I look at this equation and say, for a longer window, this is a very good stock to own for that reason. I mean, the likelihood that you produce gains no matter what the market does is very high. And that's the challenge with growth names. When they fall apart, it's violent. And when they go up, it's violent, because it's not a long-term committed kind of investment behavior. It is arbitrage. And look, folks, you know, you look at I'll go back to the scroll. A lot of those a lot of the COVID cash went into tech plays. It's what created the urge for Facebook, Meta, to go finance the metaverse endeavor. But that cash dried up. And so it's going to be a while before you can look at those and see this kind of supply-demand equation. Very strong demand, repeating supply deficits. With you, Dennis. I think so, too.
All right. We'll definitely be looking to see what happens later in the week. I myself am in the same kind of camp. I think we have a little bit of run, and then we could see a turnaround. Now, one area that I've been seeing just keep sneakily getting on up is industrials. Do you have anything on industrials? Maybe like the bigger ones?
Well, it's funny. In the Benzinga, I forgot to change the date. It should be November 14, not November 7. Let me show you. So notice very strong demand, falling supply. That's what I always look for. So in that group is a great example of the stocks you've been talking about, Mitch, the industrial group. So here's the stuff that I think looks good. GE is one of those. It's a 10 with falling supply. So there's an industrials I like. I still like Halliburton. NXPI, believe it or not, great stock to trade. And it's in tech, yes, but it has different supply-demand characteristics. KKR, you know, that's a volatile stock. All of these stocks, see this, they move a fair amount. how do you say it? Mercado Libre. I mean, it's an Argentinian company,
Libre.
but I look at that and say, well, you know, all of these things have the potential to deliver these kind of gains. And that's what I always look for. I like to trade the volatility of stocks. So if they're down, you know, if Halliburton's down a little bit today, I have a 3.6% chance roughly of that's the gain I'm after. That's how much it moves intraday between high and low prices on average. So if it's down half or more of that, and I know that the supply demand equation says that it's likely to rise, that's a very good low risk kind of trade. I like to do those things. And why? Because they produce returns at very limited risk. But long-winded answer, yeah, there's an industrials in here. And I'm not sure I would trade the sector per se. I just look for supply demand balances in stocks that are liquid and are likely to produce returns.
All right. Well, we're going to go ahead and wrap up here. Tim Quast, Market Structure Edge. You guys can check out this data yourself. Definitely go to marketstructureedge.com. I'll make sure that we include that in the chat here. I already threw up the link once, but we'll throw it back up. And I will give you a shout out for the run. Yes, last week. That was a good one.
Right.
Eventually ended up running up. Not a bad one there. Got a big push eventually in solar stocks. We'll see if those solar stocks can continue. Like always, you guys can keep up with Tim Quast also on Twitter. He does have a Twitter handle. You guys can add him and Market Structure Edge. You'll find it in the description below. And we'll see you next time, Tim. Always
good to see you guys. Have a great week.
All right, let's go ahead. Let's get a look into the market. How are we looking, Joel? On the mute trick.
It's just a little bit of a leak. Yeah, there's nothing, you know, we're not going down. This has actually been one of the quietest 15 minutes, half hour that we've had in the spoos and during the show. And it just feels that there's aggressive offers out there, after the the close over 4K. We had the lower open. We haven't seen that closing price yet. So that makes you lean into the sell side. Pre-market high 96.50 is a ways away from that close. So right now, the sellers are out there. They're not being super aggressive, and the buyers are like, I'm not stepping up big time here. So that's what it feels like at 8:57.
We'll have to see what happens. Okay, go ahead.
Here's the problem, like, and people, shouting out like an AMC today, AMC is having a good day. And we know, Joel, you called this perfectly last time. The literally the day that they start buying up the real trash, that's usually the turning point for the rally too. It happened, when was that? About 3 weeks ago, remember? We had that, or 4 weeks ago. Remember we had the rally in the market, and then they started buying up GME that one day. We can grab it, GME, the one day.
Yeah, it was GME.
October 31st. And if we go back, we had like at the S&P's rallying October 31st, and it turned the whole market. And GME gave it back that day. Now you've seen AMC. Oh, yeah, they're starting to jump in. But case in point, here's the problem. Bed Bath & Beyond, you'd think, oh, yeah, Bed Bath & Beyond, that's going to probably go here too because AMC is going. So people may be playing that this morning. I haven't seen a chart. But Bed Bath & Beyond, all of a sudden, you know what they do? They're getting their stock up a little bit, shove an offering down their throats. I mean, this is what happens in this market with the trashy stocks, is when their stocks rally and they need more cash, what a great opportunity to all of a sudden raise some cash. So I'm not sure why your Bed Bath & Beyond, use the pre-market charts top left. It's not reflecting the new price, but it's getting the beats here right now.
I will.
Because 5 minutes ago, they announced an offering here. So, I mean, if you come out, not 5 minutes ago, 8:36, so 20 minutes ago. Felt like 5 minutes ago because it's what this market is. But there you go. This is what happens with, and you can see Bed Bath & Beyond before that was moving up on the AMC. Like, oh, here we go. AMC, GME, Bed Bath & Beyond. Yeah. And then they pull the rug out from under you by sticking an offering down your throat. So, I mean, this is the problem with buying the trashy stocks is they all need cash. They're all burning cash. They see their stock prices going up and they're like, okay, let's raise some cash. You'll see more offerings into some of these. So you are at a risk. If you are in a stock that is in a cash burn situation and you're long those things, you're always at a risk when the stock prices start going higher because they time those, those offerings, and they need to raise money. They're looking at the equity prices and they start to go up a little bit. that's when they strike to sell more stock. Bed Bath & Beyond didn't go up much, but it did rally from $3.50 up to over $4 this morning. Now the offering comes out, it's going to knock it right back down. I do think a stock, some of these could get bought, but you've just got to be aware that when you're just buying nosebleed names, that when the stock prices rally, they do secondary offerings. So be careful of that.
All right, let's get really quickly.
There we go. I'm surprised they're doing it at this low of a price too.
Yeah.
They
think they
really
can't get a higher price.
Money.
They obviously don't think they can get a higher price. So I didn't read the details
Wow.
of the offering. It's senior notes, private negotiated senior notes, concurrent private placement of common stock with several institutional holders. Sounds like dilution to me. I haven't read it, but I know obviously the market's
sure
first asking questions later, but sure sounds like a dilutive note there. Obviously we're doing the show live, so I didn't have time. I'm just reading the headline. But this is, obviously, if they thought the stock was going to go $6, $7, $8, you wouldn't do this. But maybe they're thinking, well, we need the money now, and obviously Bed Bath & Beyond is in a cash burn situation. Stock that's in a world of hurt. Just be careful with the stocks you're in right now, because some of these stocks rally 20, 30, 40%. Maybe Bed Bath & Beyond didn't. There will be management looking and saying, hey, we're going to raise some money. Let's do it now.
At 348.
All right, I'm going to sneak out of here.
I'm
going to sneak out of here. We got to tight range, 20-point range. That's not gonna that's not gonna hold up. For the bull scenario to work out today, you got to take out the pre-market high. Boom. You got to take out the close, and then Friday's high is only 17 handles away. And so you would get the Friday, Monday follow through. On the downside, I'll still be trying to lean bullish until we take out that pre-market low of 39.77. And then below that is Friday's low at 39.51. So just digestion day here. The battle for 4,000 goes on. So I'm going to go cover some more tickers at Pre-Market Prep Plus, and I'll check in with you guys later on. Everyone, have a good day.
All right, Joel's getting out of here. We'll definitely keep up with him, and you guys can keep up with him on premarketprep.com. Check it out, guys. Check out Pre-Market Prep Plus. All right, let's take a look into this market. What are we going to do today? Dennis, it seems like it's going to be a fun one.
I think the dip gets bought again, because why not? Why not? The money managers are stuck. I think they're going to buy the dip on some of these tech stocks. We start with a little dip here this morning. They're probably come in and buy the dip. I don't know if it holds at a certain point. You're going to have, stocks just don't go up in a straight line, just as they don't go down in a straight line. At a certain point, you're going to have a rug pull in the Unity. It's went from 21, 18 after hours to 32.50 in basically a straight line, straight up. There was little pullbacks in there, but some wicked rallies, like 27 to 32 with no pullbacks at all. So, it probably has a little bit more follow through. I don't know where it's tossed. Maybe you're looking at like a 35, 36 area. But eventually there's a rug pull in some of these names too. As much as they were oversold 3 days ago, a lot of these names are overbought now. So I think on dips, on serious dips, I'm looking to maybe reload, not a Unity, but reload some of these names. I do like the idea of the value names that were beat up here. Some of these stocks that really have been running and been benefiting actually from the bear market are really getting beat up, I think almost undeservedly on some of these names. So some of the drugs, looking at those, I don't know about a Cardinal Health, but if some of these pull back enough, there is some value in some of these names.
What about a stock like Target? I've been keeping a watch on this, slowly starting to make its move up towards the gap zone.
Yeah, I'd probably sell it up here now. It's just moved too far too fast. So they do report, Walmart reports, Target reports Wednesday. So you could get that pre-earnings run, but we kind of already had it. So if, the bars all of a sudden come up for some of these companies too, and we didn't even talk about earnings, this week. So just quickly, you can show the earnings calendar if you want, Mitch, while we talk about it. Tuesday, Walmart, Home Depot. Wednesday, Nvidia, Cisco, Target, Lowe's, TJX as well. Thursday, we're going to hear from Applied Materials. I believe Alibaba is reporting too. They screw up the dates on that one sometimes. So Palo Alto Networks, Macy's, JD and Foot Locker on Friday, Williams-Sonoma also on Thursday. So we're coming into what is called retail earnings season. And some of these names have had a really good couple of days. So if I was long these, would I want to hold them through earnings? Probably not, because the bar has all of a sudden come up a little bit. And I don't want to take that risk. And all of a sudden, you just had a good trade turn bad because of a lousy print. So I think as much as, I'd like to say, yeah, let's, some of these names and some of the retail names have lower PEs, so they kind of fit the bill. They're also not recession proof. So I'm still not convinced that we're not going into a recession. Maybe we're going to actually navigate the soft landing. We can see out there the recession really isn't prevalent yet, but I still think like for inflation to seriously tick down, the economy is going to have some struggles.
Like always, team, hit the like. If you guys enjoyed today's show right here on Pre-Market Prep, have a good one, Dennis. We'll definitely have you back tomorrow. Let's go do what we do best. Let's get into the trading action. All right, have a good one, Dennis. Let's get you over now to Benzinga TV, where we got live trading, of course, Benzinga Live, and also stock market movers. Another thing that we're going to be playing today, if you guys are interested in learning a little bit of ways that you guys can really start getting some tax advantages. What do I mean by that? Well, today at 11 a.m., well, actually right before that, it's going to be closer towards 10:50 a.m. So 10:50 a.m., what I'm going to do is I'm going to play a webinar that we did with a tax specialist. It was really good. I'll tell you, team, there's not many times that I tune in for a tax webinar, but I even got something out of this. So if you guys want to tune in for that, that's going to be right here on Benzinga, 10:45 a.m. Eastern. Join live trading, and then we'll be swinging over into that tax prep, especially if you're looking to try to get some advantages, right? Especially live traders out there. If you're active, this is the place where you want to be to get an advantage in your taxes. Come tune in. That's going to be right up next. Don't go anywhere, team. Right here on Benzinga all day. That's all you need to be. And I'll see you guys over on live trading action. Let's see if we can make some money. Let's see if this rally wants to continue. Is it growth? Is it value? Is it both? Or will things turn around? Let's find out.